Hi, my name is Manny Mazuria and welcome to a class on market abuse. It's a basic overview, so there are a number of details that I have purposely missed out, which is worth looking into. Okay, the aims and objectives of this specific video is we're going to explore a few aspects of market abuse. Firstly, what is market abuse? Secondly, who is classed as an insider? Thirdly, what is inside information? Then insider dealing. Fourthly, fifth, unlawful disclosure. Sixth, market soundings. And finally, market manipulation. So what is market abuse? Now, market abuse distorts the transparent and efficient workings of the markets and creates an unfair advantage for the few who seek to benefit unfairly from 1. The information that is price sensitive and has not been made public. Secondly, manipulating the price of listed investments for their own purposes. Now, market abuse is being taken even more seriously by the FCA and is right at the heart of two of its statutory objectives, namely maintaining market confidence in the UK financial system and secondly of preventing the UK markets from being used for financial crime. Now, market abuse is purely about investment vehicles being used dishonestly. If gone unsupervised, people can lose their homes, pensions and any or all of their invested earnings. Okay, so what is market abuse? Now, the term market abuse covers both the use of inside information and market manipulation. The conduct this can amount to, market abuse, therefore includes A. Insider dealing, improper disclosure, manipulating transactions, manipulating devices, dissemination, misleading behaviour and distortion. Now, the FCA publishes a code of market conduct as part of the market conduct module of its handbook. The code gives guidance on what behaviours amount to or do not amount to market abuse. It's well worth looking into. Now, who is classified as an insider? Article 7 applies to any person who possesses inside information as a result of being a member of an administrative, management or supervisory bodies of issuer or emission allowance market participant, having a holding in capital of the issuer or emission allowance market participant, having access to the information through the exercise of any employment, profession or duties, and D, being involved in criminal activities. The article also applies to any person who possesses inside information under circumstances other than those referred to in the first subparagraph, where the person knows or ought to know what is inside information. Where a person is a legal person, this article shall also apply in accordance with national law to natural persons who participate in the decision to carry out the acquisition, disposal, cancellation or amendment of an order for the account of the legal person concerned. Now, what is inside information? Inside information is information of a precise nature which has not been made public, relating directly or indirectly to one or more issues or to one or more financial instruments, and which, if it were made public, would be likely to have a significant effect on the prices of those financial instruments or the price of related derivative financial instruments. Now, the definition of inside information is broadly unchanged in the market abuse regulations from the previous definition, but it is wider to capture inside information for spot commodity contracts. Now, as you can see, the theme that goes past all three is 1. Precise nature, not being made public, directly or indirectly relating to, if made public, would have significant effect. Now, let's look at precise nature. Precise nature, if it indicates a set of circumstances which exist or which may reasonably be expected to come into existence, or an event which has occurred, which may reasonably be expected or occur, where it is specific enough to enable a conclusion to be drawn as to the possible effect of that set of circumstances or event on the prices of such, meaning here the financial instruments or the related derivative financial instrument, the related spot commodity contracts or auction products based on the emission allowances. In this respect, in case of the protracted process that is intended to bring about or that results in particular circumstances or particular event, those future circumstances or future event and also intermediate steps of that process which are connected with bringing about or resulting in those future circumstances or future events may be deemed to be precise information. So if I round it up, precise nature is a set of circumstances which exist that may reasonably be expected to come into existence, or an event which has occurred or which is reasonably expected to occur, where it is specific enough to enable a conclusion to be drawn as to the possible effects of that set of circumstances or event on the prices of such. Now let's look into significant effect. If made public, information a reasonable investor would be likely to use as part of the basis of his or her investment decisions. Let's look at insider dealing. Market abuse regulations clarifies that the use of inside information is to amend or cancel an existing order, which constitutes insider dealing. It also prohibits persons in possession of inside information from using that information to deal or attempt to deal in financial instruments, or to recommend or induce another person to transact on the basis of inside information. So insider dealing arises where a person possesses inside information and uses that information by acquiring or disposing of for its own account or for the account of a third party, directly or indirectly, financial instruments which that information relates. The use of inside information by cancelling or amending an order concerning a financial instrument to which the information relates, where the order is placed before the person concerned possessed the inside information, shall also be considered insider dealing. In relation to auctions or emissions allowances or other auction products based thereon that are held pursuant to regulation EU number 1031/2010, the use of inside information shall comprise submitting, modifying or withdrawing a bid by a person on his own account or for the account of a third party. Now, recommending that another person engage in insider dealing or inducing another person to engage in insider dealing arises where a person possesses inside information and recommends on the basis of that inside information that another person acquire or dispose financial instruments to which that information relates, or induces that person to make such a acquisition or disposal, or recommends on the basis of information that another person cancels or amends an order concerning a financial instrument to which that information relates, or induces that person to make a cancellation or amendment. Now, the following are examples of behaviour that may amount to insider dealing under the market abuse regulation, but are not intended to form an exhaustive list. So please don't see this as an exhaustive list. As per the FCA section of the market abuse regulation 3.1.2, it states the front-running pre-positioning, that is, a transaction for a person's own benefit on the basis of and ahead of an order, including an order relating to a bid, which he is to carry out with or for another, in respect to which information concerning the order is inside information, which relates, or rather which takes advantage of the anticipated impact of the order on the market or auction clearing price. In the context of takeover, an offerer or potential offerer entering into a transaction in the financial instrument using inside information concerning the proposed bid that provides merely an economic exposure to movements in the price of the target company's shares. For example, a spread bet on a target company's share price. In the context of takeover, a person who acts for the offerer or potential offerer dealing for his own benefit in a financial instrument using information concerning the proposed bid. Unlawful disclosure. Now, for the purpose of markets abuse regulation, unlawful disclosure of inside information arises where a person possesses inside information and discloses that information to another person, except where the disclosure is made in the normal exercise of employment or a profession or duties. This paragraph applies to any natural or legal person in the situations or circumstances referred to with regards to Article 8.4 as well. The onward disclosure of recommendations or inducements referred to in Article 8.2 amounts to unlawful disclosure of inside information under this article, where a person disclosing the recommendation or inducement knows or ought to know that it was based on inside information. Now, market soundings. Market abuse regulation includes provisions on market soundings, the communication of information prior to an announcement of a transaction in order to gauge the interest of potential investors in possible transaction and the conditions relating to it, to such as it is a potential size of pricing to one or more investors. The market sounding may be made by an issuer, a secondary offeror, an emission allowance market participant, or a third party acting on account of persons in A or C. Basically, A being an issuer or C being an emission allowance market participant. The disclosure to be made by a person intended to make a takeover bid may also constitute a market sounding in certain circumstances. Before making market sounding, a written record must be made in respect to which sounding disclosure, rationalizing whether the market sounding will involve the disclosure of inside information. Those records will be disclosable to the regulator on request. Although this adds to the regulatory burden, case studies have proven if the above was abided by, what would have made a very different outcome to the FSA versus David Inhorn case. The final notices on the FSA or FCA back in 2012. In a nutshell, the issuer, secondary offerer, emission allowance market participant, or third party acting on behalf of the issuer or the emission allowance market participant, their market soundings are made by such people, and the disclosure to be made, if you're due to make a disclosure, i.e. if you're going to do a takeover bid and you need to speak to someone about it, you have to create a written record. You have to rationalize within the record what you're doing and why you're disclosing this information. Keep the record for all the information given, obviously date, time stamped. The person must be told ASAP when the disclosed inside information ceases to become inside information, i.e. it's been made public. Okay, market manipulation. Entering into transactions or placing orders or other behavior that gives or likely to give false or misleading signals to the market as to supply or demand, secures or likely to secure the price of an instrument at an abnormal or artificial level, entering into a transaction or behavior which employs a fictitious device or other form of deception or contrivance to affect the price of an instrument, disseminating information to the media which likely to give false or misleading signals as to supply or demand or price if an instrument which is likely to secure the price of an instrument at an abnormal or artificial level. This includes rumors as well. Transmitting false or misleading information or providing false misleading inputs in relation to a benchmark where the person transmitting or providing knew or ought to have known that it was false or misleading. And finally, any other behavior which manipulates the calculation of a benchmark. Now, the following information is among others to be considered on market manipulation as well. Now, 1, securing a dominant position over a supply or demand of an instrument which has or likely to have the effect of fixing purchase or sale prices, or which is likely to create other unfair trading practices. Buying or selling an opening or closing of the market which is likely to mislead investors acting on the basis of displayed prices, including the opening and closing prices. Disrupting or delaying the functioning of a trading system, for example, through high frequency trading or algorithmic trading. Making it difficult to identify genuine orders on the trading system by entering orders which result in the overloading or destabilization of the order book. Creating or being likely to create a false or misleading signal about supply, demand, or the price of an instrument, in particular by entering orders to initiate or exacerbate a trend. Voicing opinions on an instrument whilst holding a position on the instrument and making a profit thereon without having simultaneously disclosed the conflict of interest, and buying or selling on the secondary market of emission allowances or related derivatives prior to the auction being held, with the effect of fixing the auction clearing price at an abnormal or artificial level or misleading bidders in the auctions. There are also terms such as manipulating devices, manipulating transactions, abusive squeezes, misleading behavior and distortion, as well as dissemination. Terms that cross-pollinate with each other, creating market manipulation. So you will come across these terms, but they are pretty straightforward as the lines suggest, or as what I've explained.